Hi there, Serial Trader here. I'm going to have a look at the major US indices and mostly focusing on SPX this time. And I think we have a significant reversal at hand here this week and potentially the end of this anticipated wave 4 for this overall sequence off the March 2020 lows. And big picture, we're looking higher in this wave 5. Now, the wave 1 and 2, I think that's a pretty straightforward interpretation. But where things get a little tricky is where do we end wave 3 and how do we count wave 4 here? So now that you see kind of the weekly or broader view here, let's look at the daily. And okay, so there's a case to be made where we end wave 3 here, and that's what I've been going with for a while, and where we have an A, B, C down, which would have been an expanded flat wave 4. But given that we've gone up to a lower high and gone down to a lower low, that doesn't quite work. So one way to allow for that would be to count it as a double 3. And just bear with me. So that would be where we have an A, B, C down. And let me just drop the degree down by 1 here. But that's just for an overall wave W of a larger double 3. And then we have an X wave, so like a ABC up X wave, zigzag up for X, and then maybe we have some sort of double zigzag. I mean, there's a few ways you can count this last leg down, but perhaps something like that for wave Y. And let me just get rid of that sub-label there. So maybe a double 3, WXY double 3 wave 4. Or if we somehow want to make this our actual high for wave 3, and there's ways you can do it. I mean, you could go 1, 2. Now this would be the 5th wave subdivisions. You could maybe go like 1, 2, 3, and maybe A, B, C running flat 4. Although I don't like it because how much bigger wave 4 is than wave 2. And then wave 5 would actually be 1 degree lower, I think. That'd be 5 for 5 of 3, without showing that larger 5 of the 3. So you could do that and then just call this maybe a double zigzag wave 4 down. Or maybe, depending on how you want to count the subdivisions, ABC down for 4. Okay, so I don't want to get too caught up in the weeds here as far as how we're going to label the subdivisions, because there are, more than one, there is more than one viable way of doing it, following rules and guidelines. So what I am going to lean on is that we have a bottom of, probably some magnitude in place now. And overall, from the absolute all-time high, we have what appears to be a 3-wave decline, down, up, down. Sometimes it's good to look at a close-only chart, so a line chart, and you see basically you have a down, up, down sequence. And notably, this secondary down sequence was weaker than the initial down sequence. So that kind of, I think that discards the idea that I introduced in that last video, that okay, if we're going to get really bearish here, maybe we got a 1, 2, 1, 2, 1, 2, wave 3 of 3 of 3 to the downside. Well, that would have required some serious continuation to the downside, not this big bullish reversal. So I think that, extra bearish wave 3 of 3 of 3 move down scenario, I think that's just out the window at this point, given the size and strength of this reversal. I mean, we completely rejected these lows, even on an intraday basis. Okay? So I think that really strongly suggests that we have a significant bottom in place. So however we want to count the wave 3 where it ended, however we want to count the wave 4 correction here, I think that's not that important. And sometimes when there's a bit of ambiguity with multiple valid Elliott wave interpretations, you also lean on other technicals. Well, what do we have? And I'll go into other technicals aside from this as well, but we'll start here. Well, we have a bullish divergence on the MACD histogram. So lower low in price, but higher low on the MACD histogram. I could also say the same thing about the MACD moving averages. Lower low in price, higher low on the MACD moving averages. So I want to point out that divergence. And also RSI, so daily RSI. Now this is actually more confidence that we do have a bottom. In fact, it was less confidence here when, okay, we just got oversold and had a reversal, but there was no divergence, no bullish divergence. Well, now we got a lower low in price, higher low in RSI. So a nice bullish divergence there. And that's a more classical signature of an actual tradable bottom or a major bottom, right? So I like that. So yeah, without getting into too much detail on this broader wave count, I do think that we have the wave 4 in place, however you want to count it. And if that's the case, we'll just zoom out here. Pretty calm and objective without getting too fancy. And I mean, I could do multiple, fib objectives and wave relationships, but let's just take the length of wave 1 since wave 3 was a little bit longer. Projected off of the low of wave 4. Hang on there. Let me just get that extension tool. So yes, the length of wave 1 projected off the low of wave 4. And if that's equal, if wave 5 is just simply equal to the length of wave 1, since wave 3 was slightly longer than 1, so that would make wave 3 the longest in the sequence so far. Equality, we guessed around 5,500, so 5,510 on SPX. So later on this year or whatever, probably several months later on this year, maybe towards the end of the year, depending on how long this takes. I think that's actually a realistic technical target based on that wave 1 versus 5 relationship. But okay, that's probably all I really wanted to go through as far as this goes. I think you get my rationale here for thinking that we do have a significant bottom in place. But I just want to go to a 15-minute price chart and, okay, do we have an impulse wave off the bottom on, say, a small time frame? Well, yeah, we do. I mean, I could easily make the case we got the initial 5-wave move off the bottom. I mean, you could debate what this is. Maybe we got a little triangle here, or just a regular ABC down, zigzag, whatever. You can definitely get an impulsive looking with a clear, strong wave 3 in it, an impulsive looking, non-overlapping 5 waves up. And nothing to say it's done either. This could certainly continue into Monday before we get some sort of a larger pullback. But definitely looking very impulsive off the bottom, so that also adds a lot of confidence that it is, in fact, a sizable bottom, because a 5-wave sequence denotes the trend of one larger degree. So to me, that's pretty convincing, even just going on this short time frame. But yeah, on the daily, again, so many ways to chop this up, different ways to count the wave 4, different ways to count where wave 3 ended, which influences how you count the wave 4, even different ways on the smaller time frame to count the subdivisions of wave 4. So instead of going through that basically pointless exercise, because who cares at this point, the real question is, what is the market going to do next? What's the larger trend of the market? And I think we've got a reversal. I think we're going to start a larger trend up, and I think we're going much higher as the weeks and months unfold here. So that's kind of my bottom line, without going through all these tedious wave counting exercises. You can certainly do that yourself if you're interested. I've done it myself just for my own interest's sake, but I'm not going to bother showing all that here because I just don't think it's that helpful for the video. But yeah, bottom line, I think we're going higher, and I think the bottom's in. Okay, well, we'll go to the Thinkorswim candlestick charts. So we also have a candlestick buy signal. So on Thursday, we had what's called a piercing pattern, where we open below the real body of the prior candle and close at least halfway or above the real body of that prior candle. So that's a piercing pattern. And then we had continuation and confirmation of that bullish candlestick today, with a nice strong day up and a close above the T line as well. We were oversold on the oscillator, and now we're coming off that oversold condition, so looking quite bullish from all those perspectives. Weekly candlestick here on SPX. We have what appears to be a bullish hammer candlestick. So that's a very long tail and just kind of a hammer for the real body. So that's a legitimate weekly bullish candlestick. And we are, well, we're not oversold on the weekly oscillator, but that's fine. Wouldn't worry too much about that. But yeah, weekly reversal there for sure with the candlestick, along with the daily. So that's nice. And what do we got on the Dow Jones Industrial Average? Dow Jones Industrial Average, similar, not quite as powerful a reversal there yesterday, but then actually a stronger day today on the Dow, it seems. and it closed above the T line. And really, for the Dow, you just got some sort of a three-wave move down and a reversal. So down, up, down. Doesn't look like a big bear market starting here on the Dow either. I had a wave count on the Dow where the low was potentially already in here. Obviously, that's not the case. So I think we're forced to just go either ABC down or WXY down, double zigzag, however you want to count this. But overall, a three-wave move down and a reversal coming off the oversold condition. So that looks good. And weekly on the Dow, also a weekly hammer candlestick, so a bullish reversal on that weekly time frame. So I'd say things are starting to get pretty interesting here across various markets. A lot of individual stocks had some major bullish-looking reversals too, obviously. Okay, that's the Dow. Nasdaq Composite. So the Nasdaq Composite almost did a bullish engulfing there on Thursday. It didn't quite close above the prior day's real body, but got real close. But certainly well beyond the requirement for a piercing. And then we had continuation today and a close above the daily T line, so that looks good. We were in oversold condition on the oscillator, starting to come off that oversold condition. And on the weekly, for the Nasdaq Composite, looks like a weekly hammer candlestick as well there too. Okay, and we were oversold on weekly oscillator, now starting to come off that oversold condition for the Nasdaq Composite. And what do we have on the Nasdaq 100? I think it's largely the same as the composite. Yeah, I don't think there's any need to distinguish the two. They look very much the same. Yeah, weekly as well. Weekly hammer. Okay, that's great. Now on the VIX, we still made a lower high in the VIX compared to our prior high, even though the index made a lower low. Like SPX made a lower low compared to its prior low. So that was a bullish divergence in that regard. And now we've had some strong downward moves here on the VIX over the last 2 days. So that's typically a good indicator that the market is going to reverse and go higher as well. Complementary. Now I want to go to the VIX VVIX tool because we also have a legitimate buy signal here. So a few things to point out. So here is the VIX and VVIX high that went along with that prior SPX low. Okay. Now we also, I'll point out that we made a lower high on VIX and a lower high on VVIX compared to our lower low on SPX. So that's a bullish divergence in that regard. But we also had a more localized VIX VVIX divergence. So from the same reference point, we made a higher high on VIX and a lower high on VVIX. So that was step one of the buy signal using this system. We got below the red moving average on VVIX, as is highlighted here with this yellow square. And we got above the blue moving average on SPX, highlighted by this yellow square. So we're on a full-blown buy signal with this tool now, along with everything else I've gone through. So that also makes me quite bullish. So yeah, that's what I wanted to go through there. I mean, I didn't look at volume, but there was certainly high volume to accompany this bottom. If you look at the SPY ETF or some other ETFs, there was large volume on the day that we had the reversal. The futures had pretty good volume, all that. So that's what you want to see on a major pivot. As far as my positioning, so I closed my hedge that morning that we gapped down on the Russia-Ukraine news. So that was good. That worked. And then I was stopped out earlier on my longs, but then bought them lower than where I was stopped out and then rode them back up. So it ended up doing quite well in the end. And I continued to plan on holding those longs possibly for weeks or months to come. And I think the next thing here, if I just go back to the trading view charts here, I think the next thing here, so if you've been caught off sides or if you just have no position, I think you just wait. You wait for some sort of corrective looking pullback once we do our initial impulse wave up. And nothing to say we're done that initial impulse wave up. This could extend more. But once you get a corrective retracement of some sort, I think that's your next opportunity to initiate a new bullish position, go long, or buy calls, or whatever you're planning to do. So for me, my hedge is off. I'm long again on the futures, and I'll reassess once we look like we're starting to have some sort of reversal. But for now, I plan on riding this thing up, possibly for quite a while and to quite high levels. All right. Serial Trader signing off.